class, this is Dr. Paz and welcome to Managerial Accounting. I hope you enjoy this course and you enjoy accounting as much as I do. So first I thought that this Check Your Understanding, we would go over the differences between managerial and financial accounting. And now this slide show that you see here, I've included underneath this video, so you can follow along with that, or you are more than welcome to just follow along here. And basically, I think the best way to do this is to understand the differences between financial and managerial accounting. So right here you see financial accounting is for external users, and it's basically to help these external users, such as creditors and stockholders, make investment and lending decisions. And the primary focus in financial accounting are the financial statements, and it's run by GAAP. So basically, most of the information that financial accounting prepares relates to external party. On the other hand, we see managerial accounting is more for internal users and managers, and we're going to talk a little bit about managers' responsibilities towards the end of this video. But basically what managerial accounting does is it basically helps managers plan, direct, and control business operations in order to make business decisions. So this is more of an internal accounting reporting, more ad hoc reporting, and any type of report that would be necessary for management to make these decisions. So management pretty much determines what they want in the report and how they want it formatted, and it may not necessarily be GAAP. So in this case, what managerial accounting focuses on is we take the financial statements, but we kind of add it or modify it a bit to help us make more day-to-day decisions. So continuing with the differences between managerial and financial accounting, we have the financial accounting, the data has to be reliable and objective. Right, we're looking at the company in its entirety. We're looking at the financial statements as a whole, and we might look at some segmented data, but that would be in the footnote disclosures. And here in financial accounting, we have information that is prepared usually quarterly and annually for dissemination, and then we have CPAs and independent CPAs actually that serve as external auditors, and they kind of check these financial statements. Whereas in managerial accounting, we don't care about objective and reliable as much. We care more about the information being relevant to the decision that we're making. Here in managerial accounting, we focus on actually the segment of the business, whether that's a product line or a particular customer, region, or a particular geographical region, a department, a division, so we get more into a granular level. Additionally, what we care about in managerial accounting is the reports that are prepared. Possibly it could be one time, it could be regularly, if it is a product line that we're looking at more often, but it's not segmented in that it has to be done monthly, annually, or quarterly. And in managerial accounting, there's no independent audits, right? This is mostly for internal use. And so our last bit of information is in financial accounting, right? There are regulatory bodies such as the SEC, the Securities and Exchange Commission, that require public companies, public meaning that you are trading your stock on some type of an exchange, whether it's the S&P or NASDAQ or Dow, right? So you have to prepare these financial statements, and we're mostly concerned about disclosures. Where in managerial accounting, no such thing. We don't have to prepare anything for the SEC, and what we're mostly concerned about is maybe some behavioral and sometimes qualitative information that we can use as managers to help us run the business. So now let's talk a little bit about managers' responsibilities, right? So here we have decision making, and in that decision making as managers, we plan, direct, and control, and there's a feedback loop. So let's talk a little bit about each of those. Right, so in managerial accounting, what we care about is the cost of the daily operations of the company, and then we work with all types of levels to plan, direct, and control, and in that directing and controlling, we're making decisions and we're improving information. So in planning, what we're doing is we're kind of setting goals and objectives and how we're going to actually achieve those goals. So in these planning phases, we might want to make more sales because we want to open a new store, or we might want to reduce our costs, maybe by reducing the store hours. Usually in planning, we have a budget. That's pretty much the report that we use. So now when we're directing, here in our directing phase as a manager, what we're doing is actually running the company, right? Day-to-day operations. We might look at sales reports, whether they're weekly or they're daily, and we might adjust some marketing strategies, maybe our advertising campaign. We might also use product costs in that report to adjust our raw materials usage. So, and then in controlling here, what we're doing is we're kind of evaluating the results against the plan. So like budget to actual, right? So we're pretty much comparing the first and second steps. So, and here we're going to make adjustments, right? So we might compare the budgeted sales with the actual sales. We might make a decision between two projects or a decision between a project line. So hopefully this video has given you a little bit of idea about financial and managerial accounting, and it's given you a little bit of idea about what we do in managerial accounting.